Hello, if you can hear me. Can you hear me? This is Kennedy. Can you hear me? Hello?
Hi. Okay, so I think we are live already. I think the YouTube session has started rolling. So let's get to it. Good evening, gentlemen. Good evening, Emeka. Good
Can you hear
evening.
me?
Yes, I can hear you. So let's just do the mic check. What
Okay.
happened to Batman?
You have embarrassed me now.
Okay, so you're welcome to the July edition of Fintech Open House. Fintech Open House is a free event hosted by the Payment Blog where we tackle issues in the fintech and payment space in West Africa. Today, we are going to be talking about the payment rails in Nigeria and how they have evolved and whether they can support our innovative efforts in the space. So let's jump right into it. But before we do, let's meet you very briefly. Emeka, please introduce yourself.
Okay, thanks, Ife. Can you hear me?
Yes.
Okay, my name is Emeka Walker. I'm the CEO at Parkway, and happy to be here.
Very humble. Okay,
I took my own shot. My name is Okwe Adeoye, just Okwe Adeoye.
Please.
Obe wants to one up on me, eh?
My name is Okwe. I run a company called Untitled.
Okay, it's fine and very humble and very brief. Let's jump right into it, right? So we are looking at the payment rails, and we're going to look at the payment rails and how they support innovation in 3 parts. So we're going to look at the evolution, basically doing some definition on what the term payment rails is so that we can establish that understanding. And then we'll talk about a few other things before we look at the infrastructure we have now, and how regulatory concerns or regulatory inputs have played in that space to aid innovation, or we'll discuss whether it has blocked it or aided it. And then we'll look at the future, the new forms of payments that we are seeing and how they go on those rails that have already been defined. Is that okay? Right, so I would move to you, Obe. How would you define payment rails? What's that term?
So for me, payment rails will be the infrastructure that makes it, well, the combination of infrastructure that makes it possible to move value from one entity to the other, primarily digitally. And I think for me, this will include both the tech infrastructure, the regulatory guardrails for that, the liquidity support, the operational support that just makes it possible for company A to exchange value with company B, primarily digitally. I won't exclude cash completely.
Okay. What do you think about that, Emeka?
Yeah, I mean, I completely agree. That would be a fair definition of what the payment rails are. And it's interesting that he also included cash into it. So I think from a holistic point of view, it would not just be digital. Yeah, we also need to look at the physical part, because I think historically, cash would be the longest serving means or medium of value between different parties or different entities that are trying to transact. So yeah, I think that's a fair definition.
I'm tempted to go into what your thoughts are about cashless and how it has helped to solve or not solve anything, but I think it will really derail us. So let's stay on track. Let's stay on the rails. And so people say rails, not really rail. Are there 2? Are there more? Are there different kind of rails, especially in Nigeria? What do you think, Emeka?
So I think in Nigeria, we would say there are 2 primary rails. I'm going to discount cash, going forward. I think it would be fair for us to just more or less focus on the digital side of things. I would broadly categorize them as, the card-based rails and then the account-based rail. And then maybe sometime in the future, we might be talking about the blockchain rail. As well. So I think the most prevalent ones in Nigeria would be card and accounts.
Okay, so just to put some specification on that, what are the card rails and what are the account rails? Can we identify them?
So the way I would perceive that would be something like there's 1 where my money is held. 2, there's what is used to, I don't want to say tokenize, but capture that money and present it in something else that is not the money itself. And then there's where I can then go use that thing that has now been put as a proxy to my money. So the card rails is infrastructure that is designed around putting a card, linking it to my money, then create all sorts of ways where those cards can be accepted. So that's like the card rails. Primarily today, if we're being blunt, that's the InterSwitch network, the UP network, e-transact to an extent, etc. On the other side is, well, my money is in my bank, whether it's some company or the bank itself that's created some app or some mechanism that can take money straight out of that account and then make it possible for me to deliver it to some other side. So that's the non-card rails. In my view, the non-card rails, so to speak, is fairly recent, but has grown really fast. I think there's a lot of interest in there. It has effectively shaken the card rails a little bit. And new use cases are then coming up for, right, okay, so my phone, my bank, my money, some way to accept money on the other side without, if possible, physical devices. So that's the
Okay,
way
so
I'll separate it.
So last question on this bit, and I have two questions. So I'll just send one question to Emeka and one question to you. So I have been hearing that cards will die for a while. Do you think that that will happen? That
Cards will
cards
die.
I wanted to say why not because you'll be biased. But do you think cards will ever be relegated to checks or maybe drafts ever? Cards, what do you think? Okay.
I would say if 15 years ago you had been told that checks would be irrelevant, it would have been a fairly difficult pill to totally embrace. But you and I will agree today that checks are irrelevant. I think, well, except you are, even Allergy doesn't need check to do some of his business. So I would say if you fast forward 10 years from now, given the pace of innovation you are seeing, not just in Nigeria, like in the market, in different markets across the world, given the pace of innovation you are seeing, if you are going to be absolutely candid with yourself, cards won't die, but do you see them as relevant as they are today, fast forward 10 years from now? The short answer,
even for international.
Even for international.
Okay, so my question to you, Emeka, is so we've said that there are card rails and there are non-card rails. Is it possible that there are other type of rails apart from account rails, or does account just accounts? Do you only have accounts in that category for the non-card rails? What do you think?
Okay, before I even jump into that, I wanted to add a bit to what Tope had said. I'm actually even surprised that cards have survived this long, to be honest.
Wow.
Oh yeah, because if you look at the entire value chain of the card, right, the entire overhead, from the card production to personalization to distribution, activation, reissuing, the settlement mechanism behind it, it's just is incredible that we built all these processes around. Then the acceptance terminals, right? The cost and maintaining those terminals, whether it's ATM or POS, over time, that it is still in existence today, where you have cheaper, more prevalent means of accessing the same functionality that cards would give you in terms of transferring value from one point to the other. I'm actually quite surprised that it stayed this long. That's why I may not bet against it. Maybe we'll do some more research to find out why. But I also do not see, especially in the developing world, because we've leapfrogged beyond cards very quickly. I don't see how it continues to thrive in the current form that it's in. Today, we're seeing some form of tokenization with Apple Pay, Google Pay, Samsung Pay, where those cards are basically virtualized. And then there was a period of prevalence of virtual cards, because it's just the whole industry built around something that can easily be replaced. It's almost like the Valentine, the Valentine card industry.
You went there. I know you have so much to say about Valentine, but
so like I said, I wouldn't bet against it, but it will be interesting to see how we rapidly evolve away from that. Then to your other question about the account rules, well, I would say within the context of Nigeria, these are the two systems we can see as prevalent, right? At the end of the day, there's an account behind both of these two rails, right? Whether it's the card you're using to access it, or it's the mobile phone that you're using to access it, or USSD or whatever channel, there is an account behind it. However, because of the way our structures are, you would clearly identify or delineate these two different methods of payment. And then, of course, if we want to be a bit more futuristic or future-proof, then we can see how blockchain technologies and the application of blockchain in financial services can be an entirely new rail for both value exchange and providing financial services as a whole.
That's interesting. Thank you very much, Ope and Emeka. We'll be moving to the next segment where we're discussing the current infrastructure. There's something you said about cards that I think we'll revisit in the current infrastructure because I have differing views on what you said. So for the current infrastructure or for the current rails we have, what we have today, I'd like us to look at it, as I mentioned earlier, in two phases. What's the real infrastructure? Some questions about that. And then how has regulations enabled or disabled parties as they innovate in that space? And I'll start with the infrastructure, So it looks to me like there isn't a lot of fair play. Again, it's a thought, and I could be right or wrong based on what I'm seeing in the industry and feedback, from social media channels and all that. So there are big boys or the big players, the people that have the licenses, the money to get the licenses, they have funding, or they've been incumbents, they've been there for a while before a lot of regulations became a thing. And if you are a fintech, especially focused in a niche, it looks like you need to jump through a lot of hurdles, before your idea gets expression. And I'm wondering what you think about that. And I'm wondering what you think about that. Also, noting that both of you are a bit privileged. You run fintechs and you have contributed a lot to the system. Your introductions were very, very humble. Guys, these people have worked in fintech for like 15 to 20 years, and they built most of the things that is available today. So I imagine if Emeka wants a connect for the newest blockchain when it comes live, it will be easy for him to get it. And the same thing with Ope. But an Uju, or an Ifi that is focused on a RAM market in Maiduguri, or focused on a palm oil market, in the East, and wants to digitize that and create an offering for women in that market. How easy is it for me to get access to the rails? That's my question.
I think that the getting access to the rails today is a lot easier than it was in the past. If you look down 5-10 years ago, I was joking, some time past where I said you can imagine today people can just come in, plug into one API, and they're able to transfer funds from person A to person B. Back in the day, going to a bank and telling them you want to connect to their core banking application, people will pause and think you've completely lost your mind. Now, yes, we know that there are big players in the space, but I believe strongly that a lot of the names you hear today that have become big, rode on the shoulders of some of these other big players to get to where they are. People are open to collaborating with newer fintechs that are coming up, providing them this infrastructure. I don't think there are roadblocks per se in building a minimum viable product and pushing it out to the market. The APIs are there, whether it's an internet payment gateway you want to leverage on, or a wallet-based system, and to some extent, even some banks. You hear things around regulated entities giving other smaller players some regulatory cover. And I think the CBN has also looked at that area and said, hey, there's this sandbox type license that we can provide for you. You're coming out and you want to build something, you're not clear what the regulatory requirements are, or it's not even clearly defined by the CBN. You can come on board, get this cover, partner with somebody who currently has the regulatory cover that you need, and build out your fintech. So it would be interesting for us to see in the short term where providers like Parkway, OnePipe can, have platforms where you say build your own fintech or bring your own fintech, into the space, and all of that will be covered, and then guide you towards whatever regulations you might need in the future to continue to operate. So
that would be very interesting. That would be very interesting and helpful at the same time. Oh, but you have some thoughts on this?
I think I partially agree. things are much better now than they were 5 years ago. But depending to the degree that you think your innovation wants to go in the stack, that's the way I will put it. So, want to create something that, for example, holds money or money out of an account without the profit that is a card, or if you want to do it slightly different than what exists today. So while there is access, depending on the degree to which you want to go deep into the stack or change business models slightly or change operational models slightly, then the difficulty starts to surface. So for me, part of why I think that the gatekeeping environment, so to speak, today needs to get a little bit of a shake-up is just in that inflexibility in operational models and business models around it. So while it is not as difficult as it was 5 years ago to say, I need access to something that lets me take money out of an account via a card, it's easier now. Imagine I just want to say, well, before I take that money out, I would like to see the balance. It just goes, everything scatters once you do that. It's not as straightforward as it used to be anymore. You need to know who to talk to get that to happen, etc., etc. So depending to the degree that you want to change things a little bit or go deeper into the stack.
Okay, so thank you for that. I'll be moving into technology-specific questions, and I think there's something we have on the YouTube channel. And I said I would, tie back something you said about cards being obsolete, which I didn't fully agree with.
Cards must die.
I know you want to kill them, yeah, but we just need to discuss this point. So, ISO versus API. So it looks like the new class is all going API, but we have a lot, if not 100% of the legacy systems, connecting using ISO, which is very, very card friendly. So what do you think? They said, oh, the ISO is not flexible, it's limiting, we want to put everything inside. And then we now have the API, but is API helping standardization? Doesn't everybody have their own version of Yoruba or Igbo or Hausa they speak? Is it helping matters?
So, yeah, even ISO 8583 has its own flavor.
That's dialects. Yeah.
Just two or three. Just two or three, yeah. And that's all.
Yeah, but I don't think, if we want to judge it as a protocol, right? It's a protocol, it's standardized, it's widely adopted, and it does have some benefits to it. Look at something like the payload for ISO 8583, right? In less than 1 KB, you can accomplish, the basic financial transaction, which is moving funds from one account to the other. So in systems where you have, in areas where you do not have fast internet and so on and so forth, it's an interesting protocol to deploy, right? To solve that. It doesn't have the bloat of HTTP or SOAP and so on. It's pure binary, ones and zeros going through a wire. Now, as long as card systems continue to exist, I don't see ISO 8583 going away in a short time. It works, right? It works for the purpose. It's fit for purpose for the things that it works for. And, we keep talking about APIs. All these APIs are just abstraction layers, right? One API calling another API, calling another API. At the end of the
you're attacking your business. You're attacking the whole stack.
At the end of the day, there is some system sending an ISO 8583 message to the core banking, and it will process. Now, would I want to be doing ISO 8583 from a mobile application? Maybe not, right? Because I would now start having to deal with things around security over that wire. And things like that. But if you can secure it, if it works, it's a standard, it's a protocol. You use it where you feel it's applicable.
Okay, before
cards,
I must tackle that one now.
Yeah, but I need to take this question, right? So somebody said, you say card has legacy and complex technologies. Don't you think a shift to making the issuing, settlement, and transaction processing API based will keep cards relevant? So saying the whole value chain of producing cards, issuing them, maintaining them and all that, is it because we've left it that complex? Can't we make it any easier? The way internet banking has become easier, mobile banking has become easier. Don't you think somebody needs to tackle that?
Question will be why, right? If today you have a POS terminal at a merchant location, and yes, we've simplified the whole payment processing and card issuing and all that. We've simplified it, doesn't mean it still doesn't exist. It doesn't mean it's still not a bottleneck, right? And I use my card to make payments, and that whole process still has to go on before the merchant gets funds. Versus I come with my phone, the merchant has a phone or some system he can use to verify a transaction, and I do a transfer to the merchant. There and there, right? Without all that overhead of card issuing and so on and so forth. So the system is there, it exists, it's legacy. There is another parallel system that we see, generating huge adoption, right, in the market that we're in. If you push it a bit and get to M-Pesa in Kenya, right, where they've used mobile money and mobile technologies, I don't think cards really have so much of a fighting chance in those markets. So if it's not working, or if it's bloated, I don't see why we should keep trying to fix it. What are we trying to achieve? What's the objective?
That's an interesting thought. But you wanted to weigh in on this.
Yeah, so I wanted to tackle the ISO 8583 that ties us back to the card world versus coming into something a bit more flexible, if I can put it that way. I will use an analogy. I would say when we all first got phones, and we say our phone has color screen and polyphonic ringtone and all those things, the web pages you could visit had to be called WAP pages. Like you actually construct special pages based on the fact that there's poor network connectivity. Your pages have to be light, have to be a particular way, it has to render somehow on the phone. Fast forward to today, technology has advanced. Browsers can do so much more on the phone. A phone today has more computing power than whatever we used to think of was sending aircrafts to the moon 40 years ago, right? Should we still be building WAP pages for phones? The short answer will be no. Now we can watch Netflix on phones. We can do all sorts of stuff because the tech allows us to do that. So if we're now in a world where, yes, my API call is, for want of a better word, a whole 10 KB fat, right? But the wire can carry it. Should I still be doing a binary blob of 1 byte to push things down? If it limits what I can interact with against the core bank, I don't have to.
This perspective, is it Lagos based? Is this Lagos, Abuja, Port Harcourt based? Is it based on a segment of the market you think has iPhones? Is that a fair thing to ask?
It is based on that. That's what I'm saying. But I'm saying it is evolving so much that even the poor connectivity you see, even in remote areas. Once again, I say fast forward 10 years from today. Do you think it will be the same thing? That's what I'm saying. Therefore, do you stay where the puck is, or do you go where the puck is going? Do you try and limit yourself to the past so much that make it impossible to do things that the future wants just because you know the past exists? Should you do that?
So it's valid thought. So the last on this, also for the benefit of the audience. So we've spoken about ISO and API, but there's a flavor of ISO that has been brought out to sort of standardize or speak to the requirements that APIs are trying to speak to add more data, more fields, more flexibility, and more requirements in the payload that's sent, from one place to the other. It's called the ISO 222. Do you think that we should adopt that or start looking at that so that things are standardized? So I hear a lot of things you're saying about the APIs. I think that whatever it is you define in the Nigerian market will suit only the Nigerian market. And then when you go to South Africa, it's going to be different. When you go to Kenya, it's going to be different. And that's where I see card still has the upper hand. Clunky, tedious, everything. But the MasterCard is a MasterCard everywhere. Do you understand? Compared to APIs. So what do you think about this ISO 222?
I'll let Emeka go first.
So
that I can counter-attack.
Yeah, it's okay. It's okay. I like the devil's advocate player. I'm not saying you're playing the devil. So
it's fine.
So at the end of the day, right, standards are being, built all over, from healthcare to fintech and so on and so forth. Now, the two things to consider when a new standard comes up, or in terms of adoption, will be what's the use first, and then secondly, there's compulsion. Compulsion can come from a regulatory standpoint. For instance, when we moved to EMV was pre-existing, but we were still using Mark Stripe, and then compulsion came from the regulator and said, "Yeah, everybody has to move to EMV." Then the other thing will be, is there really a need for this, right? The systems that we currently have today, are they well served by the protocols that are in place? Now, if they are not well served, then we'll see a migration to ISO 222. If not, I mean, we'll continue doing what we're doing until it's a clear need. The truth of the matter is, while I do not want to trivialize fintech, I think that the technology, the core technology of fintech is very minimalistic, right? The core, this rail that we're talking about, the ability to transfer value from one person to the other, is moving value from one accounting ledger entry to another. That's really what it is at the heart of it. The complication really begins to build when we start talking about the settlement layer, when we start talking about liquidity provision, when we start talking about all the other things, KYC, regulation, those things that ensure that there's trust and verification in the system.
Yeah.
This is where the bloat and complication comes in. From the core technology, it's almost quite trivial, right? Today, you're passing the PAN, the expiry date, the PIN into a system that says, okay, hey, this is good, and it goes to debit your account. That's really what is happening, right? So, as if we're talking about pure payments. Of course, when you come to finance, when you're talking about de-risking people for credit, or you're looking at cash flow forecasting, all these other interesting things that you can build around the data, the history for, the economic transactions that somebody is doing, then we can start talking about how these extra APIs, these extra layers, can help. So I feel adoption would happen if it is solving a fundamental problem. People won't need to be told to move, or if there's compulsion in moving from one standard to the other.
Interesting. But please permit me to skip your views on that, because we need to move quickly.
I was just going to say, on this one, there's no pushback.
Okay. And then we're going to regulations now. Okay. The big elephant in the room. And I want to talk about regulations from two perspectives. People have complained a lot, very verbosely, on the media about what the regulators, because there's one we know, but there are a couple of others as well, the NDIC, the SEC, and all that, NCC. But to what extent do you think they have enabled or been a blockade, to the innovative things happening in the fintech and payment space? I'll start with you.
Yeah, so I would say, for me, it's a case of, if you look at the Nigerian regulatory environment over a long enough time span, say 10 years, right? It has been net positive. That's, hate them or love them, when you look at a long enough time horizon, the incursions and the interjections and the things that has been done from a regulatory perspective over that time period have actually pushed this industry forward to an extent. Whether it is helping to create a competition for the friends we have somewhere in VI, whether it is helping to create frameworks that make it possible for KYC to be better, a long enough time horizon, it is positive. But then the things that make all of us uncomfortable are the short-term policy fluctuations. So things that I said this year that make my business a little bit harder, then 6 months later it's adjusted slightly and my business is a little simpler again. Then they do something else and then it is scattered again. It is those short-term interjections that frighten us, just because they come at a time when you are not expecting. But if you look at a holistic view of it, all of these small adjustments and annoyances, when you add it all up together holistically, I think the regulators have done Nigeria some form of good. It's just the short term.
That's interesting. Emeka, let's hear your views on this.
Well, I'm not happy that me and Ope are agreeing on a lot of things.
I was quite worried too that he agreed on that one.
And I would agree with him as well on this. When we take a long-term view, we would definitely see that things have progressed. I also would say, that the regulator in the financial services space, I wouldn't say that they actually stifle innovation. I think that innovation is happening. It's happening at a very rapid pace. Of course, the regulator would naturally be slower to catch up. Maybe in their effort to speed up the process, they are unable to get a very big picture of what is happening. And then when the regulations come in the short term, like Ope has said, we start seeing people feeling the pain. But also, it will be important for us when we make some of these comments to try and put ourselves in the position of the regulator. You as a fintech provider, it's all positives for you. You're seeing the business, you're seeing the impact you're making, and you're looking at your bottom line, right? But the regulator has to take a more holistic view, including fiscal policy, and protection, customer protection in the short and the long term, right? So sometimes when they make some of these moves, yes, it can be worrisome. And have they missed it a couple of times? Yes, I believe so. Case in point would be, driving a cashless agenda and then reducing the transaction fees at the ATM. You begin to wonder, if you're driving a cashless agenda, then you should be penalizing people, actually
for taking cash,
for withdrawing cash at the ATM. So much so that you would see some store has a POS terminal. Somebody comes in, maybe it's not functional, maybe they're not interested in paying whatever the POS fees at that point, and they say, hey, go to an ATM and withdraw.
And bring us the cash.
And it's free, it brings the cash. So, there have been things like that, and you start worrying as to whether they are also seeing the big picture. But yes, they consider a lot, and unfortunately, they cannot consider all of us at once, because yes, we're evolving and we're growing rapidly. But net, I think they've done.
Okay, so that's a really good view. On regulations, the last thing I would like to ask is, there's no fintech regulation, not one, that you would say ties up everything we do in Nigeria from a fintech perspective, all in one. And all you need to do is to convince your investors or whoever is bootstrapping with you, to get that license, and it fulfills everything. So we see a lot of sellotaping going on. I want to be in charge of my store value, so I get a microfinance bank license. I want to be able to put an icon on commerce sites and all that, and I get a PSSP license. And I want to be able to put agents out on the field and give them channels to transact with, and I get a super agent license. And I want to move my game to the next level to do either something with a wallet, or with a switch, and I need to get an MMO or a switch license, and I don't know where the PSB fits into, all of these things. So it looks like it's a constant looking for and aspiring for one license, after another, and still there are cracks in, within all these things. You want to do lending. What kind of license are you going to get for lending, and X and Y and Z? So what do you think new players should do differently? Should they just agree that this is the game and maybe look for as much partnerships as possible? Could it be better?
I think for me, yes, you got me. I think for me, the game is the game, right? So if they come and play basketball, you follow them and play the basketball the way the rules of basketball are. If they say, okay, now basketball is now football, you join them and play football the way football is played. So I think if right now the regulatory environment is constructed such that you can take different building blocks and sellotape it to achieve whatever outcome you are chasing after, then that's what it is. In fact, while it brings some non-clarity, I also counter that a little bit and say, like, is that not a good thing? Like, it actually basically gives you Lego blocks to compose the right set of use cases that matter to what you are trying to do. The constraint that spoils that is, I imagine that you're now dealing with 3 or 4 regulators, federal versus state, different pricing, different red tape environment. But in the grand scheme of things, imagine that I want to start a fintech business. I get one small license in Lagos, assuming that it was abroad, where walk into a government office and in 2 hours you're out with the certificate you want.
Yes, gosh.
That agency, if imagine that you could compose an innovative environment that way by just getting a license here, a license there, one there, very quickly, that lets you create a new type of something. That would be ideal. The only thing that is making all of us uncomfortable now is that it's not that way. But being composable, being able to take different patterns, sellotaping it, is actually at the core of what makes innovation. Anyway, when they say there's a fintech license, for example, it now constrains what you can be to an extent. That said, I know there's still also the sandbox, which I don't know how well that is going, but there's that. But I'm just saying that in general, having to deal with different types of regulatory licenses might both be good and bad. And it will have been much better if it was just that the government agencies are efficient. Then it will have been absolutely perfect.
Okay, Emeka, please let's quickly hear your thoughts on that so that we can move to the next stage and then bring this to a close.
Yeah, I think that with the new licensing regime, yes, they may have tried to clean this up a little bit, where they are now saying there are two major categories. It's either your three categories, switching an MMO, switching an MMO or PSSP, right? Now, the PSSP is where this building block Bear is talking about comes in. So other licenses, you can go and get a PSSP license as long as you're not holding money or you're not responsible for settlement or connecting to a card scheme. You can now start adding on. You want to do agency banking, you can add on the agency banking license and so on. And I think they simplified it to a point where they're saying, to add on all these things, you meet the minimum capital requirements, and then you request a letter of no objection. So you're allowed to. 5 years ago, was it this clear? Apparently not. I mean, we hold two licenses in Parkway, and I can tell you that trying to make this uniform has solved a lot of problems for us, right? Because before now, if you had 3 licenses, you get audited 3 times by 3 different sets of people in the course of the year. And at some point, you're wondering, am I doing business or am I just getting
being audited?
Audited.
and having a very, very large compliance team, just making sure that everything is in check. Okay.
Exactly.
Interesting stuff.
So I think it'll get better, and they are responsive, to the extent that they are, a government entity. So I'm sure as we complain and bring out some of these points, they would listen and make the necessary adjustments.
Interesting stuff. So let's go to the future now, and we've run out of time, but I'll please crave your indulgence because I know a couple of you have meetings after this, so that we can just discuss the future a bit. Tying to how people sellotape licenses together is this thing that has really helped a lot of people, especially people that are focused on the niches, collecting money in those niches, is this thing that we call BaaS. So BaaS is banking as a service. And it has shown itself in forms where you want to pay for something, and maybe that payment gateway doesn't have 100% acceptance for all the banks. Actually, in Nigeria, there is no payment gateway that has all the licenses from the banks, and we've been on that for a while, Project Sparrow, yeah? So, as in, gosh. So, there's Team Arts came up with something, really innovative, and you have the BaaS infrastructure, behind that. Now, I'm asking, why are there only 1 or 2 banks? Why aren't the banks playing in this space to also help make things easier and earn money as well? What do you think about it?
I can tell you for a fact that in the next 6 months to 1 year, the Nigerian banking sector well enough. There will be several banks at a minimum offering virtual accounts as a means of revenue collection. Bam. At the barest minimum, it will become pure water in about 12 to 18 months. It will be all over the place. Now, can it be stretched to do even more? Like, can virtual accounts hold deposits? Can virtual accounts offer proxy banking services, etc.? I think that's where it starts to get interesting, and where it might take a little bit more time for people to warm up in that direction. But I think at the barest minimum, this banking as a service that is expressing itself in the simplest form today as a virtual account that is used for doing collections will soon be all over the place. And I give it, just because we know the market for what it is, I give it 6 to 18 months. Most of the regular corporates will have it.
And I'm hoping that the banks
Okay.
actually.
Emeka, I want to ask you something different, but
I need to.
But you can weigh in on that. Okay.
I'm actually hoping that the banks actually sleep on it, because remember that you also have mobile money operators, right?
There you go.
Doing this virtual account service. I mean, for us, for instance, is one of our biggest products out there.
There you go.
You know, if the numbers are released today, I'm sure some people would be surprised at how prevalent and how useful this is. So maybe the MMOs can actually step up and take care of that aspect, since it is a technology first operation anyway. So I think I agree with you. 6 months is even too long. Before the end of this year, you will be surprised as how far this will go.
I would like to question you further on what you said about MMO, right? Because I was reading the last regulation that came out earlier this month, and what the regulation said was that whatever wallet, so the regulation said that MMOs are allowed to connect 3 types of stored value accounts or repositories to the MMO offering. So you can connect wallets, you can connect cards, the 3 different kinds of cards, and you can also connect accounts as well. And then these accounts for your subscribers should be domiciled in a deposit money bank. So at the end of the day, you still have grandfather bank at the back. You're not divorcing from them. So it's still the same thing.
No, it's not the same thing, because MMOs are allowed to store value. Of course, the physical funds are in a virtual pool or in a trust account in a bank. But on my platform, if he has 500,000 naira in her account or in her wallet, right? So, and then she can spend it. So the difference between a mobile money wallet and a bank account, really, they are not so much. The constraints really today are around MMOs being able to issue loans. That's really where the constraints are. In its form and function, a mobile money wallet is very similar to a bank account.
Okay. Am I able to transfer foreign currency outbound, not inbound? Inbound, yes, the regulation says so, but am I able to pay school fees in dollars from an MMO
Take you
account?
on that. Can you do that with your bank? Can you do that with your bank easily today?
Even today?
Yeah, I can do that with my bank. Not easily, but I can do that with my bank. I can do that with my bank. I'm serious, but not easily, but I can. I mean, I have to go fill that whole form. Yeah, but I'm just saying, if you're saying it's the same thing, is it really the same thing?
Yeah, that's in form and function. If you take out, you can do with a DOM account. Yes, you can open a DOM mobile money account, a domicile mobile money account. But if you have a Naira bank account and a Naira mobile money wallet, there's really nothing you can. Even today, we're allowed to do savings and earn interest on savings.
So I think this will be the final question for this FinTech open house. Banks are going the way of the holdco, especially the tier 1 banks that have invested in a lot of the technology and infrastructure to enable BaaS. Does it look like do they look like businesses that are trying to enable BaaS, which is really enable fintechs that we are prophesied to kill them? Or are they also putting themselves out in the front to go after that market that you guys think you've seen?
I will reserve my comments around the concepts of holdco as a saving grace for banks.
Wow. Okay, please. I hope you're not reserving your comments.
No, I think that at the end of the day, everybody would need to look at their own strategy and how they want to play. If we're looking at banking as a service and even extending it to the whole open banking APIs and finance as a service, I feel that if the banks are really open and allow third-party organizations to innovate on top of their infrastructure, whether it's a bank or even an MMO, you would get better mileage than trying to go out and replicate services that are already
what you don't have the DNA to do.
So, you know, I won't argue DNA, I won't argue capability, I won't undermine, you know, some people are quick to say, banks, you know, they are slow, they won't get this done. They should, you know, I don't want to go, you know, there, but I feel that you might get a lot more mileage if you're a bank with an open infrastructure, and then you encourage as many players as possible to build value on top of what you have. That way, you become more relevant, even to the end users or to the fintechs that you're powering. You know, and I'm happy that it's not just the banks that can enable this ecosystem. You now have payment service banks. You have mobile money operators. You know, anybody who wants to be that underlying infrastructure can do that and provide the services and enable fintech companies to innovate and build on top of what we have.
Interesting. So this was very, very informative and very engaging as well. Thank you very much, Emeka. Thank you very much, Ope, for coming on. And thank you to everyone that has logged in from the YouTube channel. This will be available to persist to the channel, so you can come watch it after we've gone off air. Thank you, everyone. And thank you to the Payment Log team as well. All right, have a good night.
All right,
Bye.
thanks.
Thank you.
Thank
My
you.
pleasure.
Ope, it was good to see you again. Bye.
Yes, boss.
Cards will not die.